Bajaj Finance is up over 3.5% after Citi opens a 90-day positive catalyst watch, issues a buy recommendation on the stock with an 81.50 price target. The brokerage expects loan growth stability, positive NIMs, and only a marginal rise in credit cost for Bajaj Finance.
Kotak Mahindra Bank is up over 1% following bullish calls coming in from brokerages like Citi and Jefferies. Both upgrade the stock to buy from hold. Citi opens a 90-day positive catalyst watch and raises the target price from 1,940 to 2,070 rupees, while Jefferies sets the target at 2,120 rupees.
Petronet NLG is down over 6.5% after Citi issued a sell rating on the stock. The brokerage has also opened a 90-day negative catalyst watch. It says that PNGRB's latest call to bring regasification activity under the regulatory purview is a meaningful regulatory risk for the company.
CSB and South Indian Bank both climb higher on the back of their quarterly business updates. CSB Bank sees robust business growth for the third quarter. Deposits rise 22% year-on-year, while South Indian Bank rallies despite growth slowing down.
And shares of Goa Carbon have rallied more than 7% after operations at one of the company's key units in Bilaspur have resumed normally.
Hello and welcome to Chartbusters. I'm Nigel and with me is Hormuz. Hey Hormuz, good to be back. The market seemed to have started the new year on a positive note. Yesterday had a good session and today as well you're seeing some follow-up. Well, you could quibble that volumes are on the lower side, but I'll tell you what, the bulls, if you told them you're going to get 130 points this morning, they would grab it with both hands. So we're seeing a bit of an underperformance from the broader markets.
The markets are welcoming you back with a lot of cheer.
I'd like to think so.
Nigel. Well, yes, before we get to the markets, the manufacturing PMI data on your screen, like 56.4 compared to 56.5. So almost steady on a month-on-month basis as well. This is for the month of December, mind you. So and reading above 50 indicates an expansion. So expansion continues in the economy. Relatively steady on a month-on-month basis is the manufacturing PMI. But just as Nigel was mentioning, the markets doing well. They did well yesterday. They are continuing on from where they left off, 23,870, and now is the actual test for the index, right? It's trading above its 200 DMA. The key now is to sustain. That's part one, and part two is to get to 24,000, whether they would have enough legs to do that.
Okay, all right. Well, let's get straight to our first corporate on the show, GIC Re. That's the stock in focus. Starting January, reinsurance treaties as well as rates will be revised for India business. Which are the segments which are expected to see this revision in rates and by how much? Also, what's the likely impact on business? Well, we have with us Mr. Ramaswamy Narayan, who's the chairman and managing director of the company, who joins us on the show. Well, sir, good morning. First of all, Happy New Year to you, your family, as well as your entire team. Run us through this quick aspect, with regard to this, reinsurance treaties as well as rates getting revised upwards. How much will it be? For which segments? And if you could tell us the impact on the financials of your company.
Yeah, thanks, Nigel, and wish you and your team, as well as all your viewers, a very happy new year. So on the reinsurance side, there are two things that are happening. One, of course, is, the international business is really, the changes happened, the renewals have taken place on 1st of Jan. But there, the prices have kind of remained soft because, the loss ratios have been better out there. But when it comes to India, so just a bit of a clarification here. So the Indian renewals really happen on 1st of April. And what change that you were talking about is basically on the direct side. If you had seen from 1st of April this year, from 1st of April 2024, for the last 9 months, the property business, the rates they went through a lot of changes. They really went down because people were trying to ramp up their market shares at very difficult and unsustainable pricing. But I think going forward from 1st of Jan, we expect this pricing to stabilize, this prices to go up on the property front, because currently the pricing that has been done by the industry was not really sustainable. So I think these prices will go up on the property front, and the changes on our financials, I think our financials will look good. The way we are seeing it, our combines should improve this year compared to last year. So last year we ended with about 112% of combined across both domestic and international. I think this year the combined will come down to 110%.
Mr. Narayanan, good morning. Thank you for joining in. Wishing you a very happy 2025. And since you mentioned financials, sir, I'd like to ask you a two-part question. For FY25, you had mentioned a couple of things. First, that you wanted to have a top-line growth of 10% for the full financial year and a net
Yes.
earned premium growth of around 5 to 6%. For the first half, your top-line growth has only been 1% and net earned premium has grown by 2%. Now, do you expect H2 to be that good for you to cover the remaining ground and achieve what you have guided for? And what do you expect in the second half going forward?
Yes, I would say so. So if you see, we ended last year with about 37,000 crores of gross premium, and we had said 10%. So we expect to be writing about 41,000 crores of total premium this year. Till H1, that is till September, we did about 20,800 crores of premium. So we are well on target of reaching 41,000. Same with earned premium. So I think from a business perspective, yes, we are very confident of doing a 10% growth compared to last year, and that will reflect well on our bottom line as well.
Okay, all right. So we got that. You're maintaining your guidance. You believe that you'll stick to what you have set out, despite of having a little bit softest second quarter and the first half of the year. We take that on board. Your underwriting losses, they have come down, and your operating profit as well is up. Could this pace of improvement with regard to both your underwriting losses as well as your operating profit continue? And could you give us a number with regard to underwriting losses? What does it come down to?
So, last year we finished with about 4,000 crores of underwriting losses.
Yes.
We expect that to come down to about 3,000 crores this year. And that is based on, the kind of losses that we've been seeing in the market. We are, of course, monitoring it closely, but we believe total underwriting losses should come down to about 3,000 crores. Now, on the investment side, we're still seeing how things would change because on the fixed income side, of course, our investment income has gone up. But one important piece of our total investment income is the profit that we gain from trading or side the selling of stocks. We have not done as much as we wanted to or as much as we normally do every year, simply because markets have been down in the last few months. We will see how the markets change in the next 3 months to decide, how much of profits we will book on that side. So that will really, depend on the market changing for the better. And based on that, our profit figures could change. At this point, we are maintaining that our overall profits will remain at last year's figures, simply because our investment income could come down because of the sale of profit on sale of equity.
Okay, just to reiterate that point, the underwriting losses come down to 3,000 crores from 4,000
Yes.
crores. And last year, operating profit was around 4,100 crores. So for this year, it stays in that vicinity. Does it go up? If yes, by how much?
No, it will stay around that. It will stay around that. Yes. And the overall PBT and PAT will remain at the same levels as last year.
Got it.
Now, Mr. Narayanan, since you mentioned in your previous answer that the markets were down and that resulted in some fluctuations, was that the reason as well that some of your segments also saw negative growth in the second quarter? And do you expect that kind of pain to continue in the remaining 2 quarters as well?
No, not in the business. I think business is doing fine. I think it was only property which was, where the pricing really went down because insurance companies on the direct side were trying to ramp up their market share. But I think we've had a good amount of discussions with them, trying to guide them on the pricing. And most companies have seen that the pricing that they have been doing is really not sustainable. So going forward from 1st of Jan, we expect those pricings to stabilize. Otherwise, our growth in the business will continue at whatever levels we had indicated earlier. The only reason for profits not going up in spite of losses, underwriting losses coming down, is because, like I said, we have not really booked too much of profits on sale of equity. We are waiting for the right space, in the market before we do that. So depending on how those things change in the next 3 months, our investment income could go up. If that happens, the profits could go up. Otherwise, it will stay at last year's levels.
All right, Mr. Narayan, final question before we let you go. The government of India, well, they paid off some stake, 3.5% in September earlier this year. The holding has come down to around 82%. You're sounding very optimistic about business, which could be a good time for them to go ahead and reduce stake further. Have you heard from them? By when do
No,
you
not
need
yet.
that stake to come down to 75%? You could give us a timeline. And should we
Uh,
expect something in 2025 with regard to the government pulling down their stake further?
It could happen. Initially, when we thought, in that juncture, when the government brought down the share, we would actually come down to about 75% levels. But they decided not to do the entire dilution at one stage. So now, yes, it could. I mean, if you've seen, our prices have gone up. The price of GIC has gone up in the last month or so, and the stock looks good. The performance looks good. The way we see it in the short to medium term, this company should do very well, because the business is really doing well. So with all that, the government could take a call to reduce it to 75. I don't think they have any dates in mind. They've not told us anything on that. But yes, it could happen in 2025.
All right, Mr. Narayanan, thank you so much for sparing time and joining us today. Wish you a very happy 2025 and good luck for the rest of the financial year as well. That was the management of GIC Re, also saying that this government stake sale for the remainder stake may happen in 2025, but no timeline just yet. Well, time to shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Neha Dave of moneycontrol.com is joining us today to talk about a stock that she is tracking very closely.
Today's stock idea is ICICI Prudential Life Insurance Company. The insurance stock has significantly outperformed the private peers in the past 1 year. While HDFC Life and SBI Life has delivered negative returns, ICICI Prudential Life stock has rallied 22% in 2024. The surge in the stock price is not surprising, as after 4 to 5 years of no growth, the company delivered industry-beating top-line growth in the past 4 quarters. With reduced dependence on ICICI Bank, ICICI Prudential's growth has been driven by proprietary channels, that is agency and direct channel. While the top-line growth, that is APE, annualized premium equivalent growth, has been robust, the company's margins have been declining. How should investors read this mixed set of data? The margin has fallen mainly because of the shift in the product mix in favor of ULIP in recent times. The share of ULIP in total product mix should stabilize at the current level. As a part of the strategy, the company's focus remains on growing relatively high margin protection business and also on the annuity products. Going forward, the company will be impacted by the surrender value guidelines changes that have kicked in from October. However, because of non-linked business at just 18% of APE, the impact would be limited. In terms of valuation, the company is trading at around 2 times embedded value as of September. Even after the rally, ICICI Prudential is trading at a significant discount to HDFC Life and a slight discount to SBI Life in terms of valuation. With building blocks in place, ICICI Prudential has pushed the growth pedal, which along with the stable margins should lead to valuation re-rating. Long-term investors should accumulate the stock.
Well, that was Money Control Pro there. But time for a short break. We leave this segment of Chartbusters with the Nifty at the highest point of the day, 23,880 now. But on the other side, we'll be joined by the other newsmaker of the day, that's the MFI stocks. And Alok Mishra, the CEO and director of the Microfinance Institutions Network, will be joining in on the other side to discuss the report about the regulator delaying the capping of lenders per borrower. All this and more on the other side. Stay tuned. Welcome back. You're watching Chartbusters here on CNBC-TV18. Now, reports are saying that the microfinance self-regulator, MFIN, has deferred the implementation of limiting the number of lenders to 3 per borrower by 3 months. Now, this new timeline with effect from the 1st of April. Now, we have Alok Mishra, who is the CEO and director of MFIN, who's joining in now to discuss more on this in detail. Mr. Mishra, good morning. Thank you so much for joining in and wish you a very happy new year as well. Now, could you first confirm to us whether you have deferred this by 3 months, and also could you elaborate on the rationale behind this move, because the announcement was made just last month?
Yeah, thanks for having me here, and wishing you all at CNBC team a very happy 2025. So let me put the things in perspective. When we issued the guardrails 2, in November, it had 7 covenants from underwriting to KYC to lender cap to overall cap on indebtedness, which were adopted by the industry. Now, out of the 7 covenants, only one, that is the lender cap from 4 to 3, that has been deferred instead of 1st January to 1st April. And why so? Let me explain you the rationale. All the other 6 are going ahead from 1st January. Only one is being deferred. If you remember, in August, we had issued the guardrail 1.1. In that, we had capped the lenders to 4. What we got from the field after we issued the guardrails and from the feedback from the institutions, the regulated entities, was that the changes to the IT systems, the business rule engines and all that takes time. And to do it right now from 1st January, when they have already done one major change in August and September, that would be a little troublesome and can create some problems in implementation in the field. So that's why we have given some time, that is 3 months, and from 1st April, it will be on. All other 6 covenants, from underwriting to KYC and reporting to credit bureaus and all that, whatever was there in the guardrail, that kicks in from 1st January. So no major change.
Mr. Mishra, good morning and good to see you in. This is Nigel on this side. So you're saying that because of various reasons, you've pushed it down by closer around 3 months. The fear though, sir, that Q4 could be very, very good for some of these lenders in terms of growth. But on asset quality, there's a bit of a worry that's looming. Ain't you worried about that?
See, let me again, because put the things in perspective. Number one, what the field reports which we are getting for December, though I am yet to get the credit bureau data, in the December, there is marked improvement in the efficiency, collections efficiency. The quality is getting better. Second, when you say that this will lead to, if we postpone it by 3 months, it will lead to some more asset quality. So it is not so, because the lenders of their own, because of the credit quality issues and the liquidity drying up for NBFC MFIs to a large extent, are already going a little bit slow in disbursement, and they are already cautious. Third, the guardrails, when we bring it down from 4 to 3 lenders, that only affects hardly 2.5 to 2.8% of borrowers. That's not significant. So I don't think a 3 months is going to make any change in the field level asset quality.
Okay, all right. Mr. Mishra, we take that clarification on board. My colleague Abhishek, though, he has a few questions for you. Abhishek, please go ahead.
Well, Mr. Mishra, over-leveraging still remains a key concern in the microfinance sector. How will that get addressed by, differing by 3 months? And as you said, the proportion is really small, but the pain is very huge. If you take a look at the asset quality of lenders, over the last 6 months, or especially in the first half, has deteriorated massively, and they have guided for further deterioration in asset quality as well. And we are hearing about news reports of frauds that have been happening. So how will the quality of loans get improved if at all the guardrails would have been placed today versus deferment by 3 months?
No, Abhishek, I think I don't agree with your last part of the statement. That is frauds and news reports and all that. I have not heard of, we get constant field reports from the field. I have not heard of any fraud, minor or major. Number one, let me put that on record. Second, when you talk about over-leveraging the microfinance sector, which is at present of 4 lakh crore, including banks, SFBs, NBFCs, and NBFC MFIs, is a very small part of the total financial sector in India, which is around 170 lakh crore. Still, the number of rules which we apply and the number of precautions which we take in underwriting are enormous compared to the other sectors. And if microfinance clients, part of it, that is 5%, 6%, get overburdened, it is not only the microfinance, because microfinance gets the blame because they are primarily our clients, but there are other lenders who have no restrictions getting into our segment and lending to the microfinance clients, that is the retail overlap and other things. That is also a cause of overlending. So we, in our underwriting, because we cannot do anything about it, so what we do is we are trying to cap the space for microfinance as much as possible for us to do that. And that should bring down the over-leveraging concerns in 5 to 6% of clients. Other than that, practically if you see, if we defer, if the lender cap, as I explained earlier, from 4 to 3 was going to affect, say, 3% of clients. And in the situation when the liquidity is tight and you say credit quality concerns are there, institutions have already taken steps to strengthen their underwriting. They are not going to lend indiscriminately, and they already have a liquidity shortage. And 2.5 months to 3 months delay, I don't think that's going to cause any extra concern on the asset quality.
Well, sir, if you remember, some time back, there was a, cap with respect to the spreads that a microfinance lender could earn. Now that spread cap has been removed and lenders are free to charge their customers. Do you agree or do you concur with the fact that putting back the cap on, the spreads that a lender can make, that would also lead to some kind of improvement in this system?
No, you are confusing two things: over leveraging and interest rates. Over leveraging is a different part, interest rate is a different aspect. Now, coming to interest rate, when you say in 22 the interest rates were deregulated, that was only for 35% of the sector, which is NBFC MFI. The 65% of the sector was already deregulated. It was never under interest rate cap. Only thing which RBI did in 22, that for 35% of the sector, which is NBFC MFI, it leveled the playing field. And when you say deregulated also, deregulated doesn't mean that it is free for all. Deregulated means that you have to have a well-defined board-approved policy, which is subject to RBI's regulatory scrutiny. And that is why you would have seen that the interest rates, despite the deregulation, have remained range-bound. And if you compare with other sectors who are lending in the similar segment, they remain the lowest still.
Well, thank you for your time, Mr. Mishra. Back to you, Nigel.
Okay, all right. Thanks a lot, Mr. Mishra, for joining in, and Abhishek for joining in this particular interview. Well, for the time being, I'll tell you what, we'll slip into a short break. We come back, we'll continue to focus on markets and stock-specific action. Don't go anywhere. Welcome back. Well, markets continue to build on to the gains. Participation is low, but the bulls seem to be taking advantage of it. So we're up 180 points. Remember, today's Nifty weekly expiry. And as we told you earlier today, with regard to the options data, the resistance comes in at around 24,000 odd. So the markets have positioned themselves, the traders have positioned themselves that we don't get past the 24,000 odd mark. For the time being, we're 80 points away from there. But since it's New Year's, it's Christmas as well, and the festivities continues, it seems two stocks, they are bucking the trend. Jubilant Foodworks, well, that one started off with a cut of around 1.5%. That's moved into the green. So that comes up for you on the screen. And United Spirits as well. Looks like people are drinking it away because that one as well has seen a good spike up in the last few minutes. And in fact, the new listing, Dam Capital, that's moving higher on rather large volumes. That as well, up close to around 6%. So plenty of action actually in the broader markets as well. Hormuz.
Oh, plenty of action, and plenty of action and not in the Nifty either, because the IT names are leading the charge here. Infosys in particular at the highest point of the day now, it's contributing 40 points to the Nifty upside as we speak, and very ably helped by auto names like Mahindra and Mahindra and Maruti as well. Remember, these two were the outperformers within the auto segment in yesterday's session after their sales numbers, and they are continuing from where they left off in yesterday's session as well. 3% higher for Maruti as well, now 11,500 on the stock, and Kotak Mahindra Bank, after the dual upgrade that it has received from Jefferies and Citi, continues to be at the highest point of the day. But with that, it's a wrap on this edition of Chartbusters from Nigel, me and the team that put this show together. Thank you for watching. But here's some good news for our viewers before we wind down. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app, and get instant access to breaking news, in-depth articles and financial world updates at your fingertips. You can download the app from the Apple Store or the Google Play Store right away. From Nigel and me, it's goodbye.